In today's short video, let's talk about an ongoing interesting topic about US dollar collapse in the fall. Many people have been thinking what it would take for the US dollar to collapse, especially in recent years through all the crazy money printing cycles. Ever since the launch of quantitative easing, many worried investors have asked, will the US dollar collapse? It is an interesting question that might superficially appear plausible, but a currency crisis in the United States is just unlikely. What is going on, guys? This is Barro AKA Investmentor. Thanks for your time and watching. I hope you don't mind to hit the like and subscribe button first before everything. Your click to support always means a lot to me and this channel. Let's start from why currencies would collapse. Financial history is full of sudden currency collapses. Argentina, Hungary, Ukraine, Iceland, Venezuela, Zimbabwe, and Germany have all experienced terrible currency crises since the 20th century. Depending on the definition of collapse, the Russian currency calamity during 2014 could also be considered another example. The root of any collapse stems from a lack of faith in the stability or usefulness of money to serve as an effective value storage or exchange medium. As soon as users stop believing that a currency is useful, the currency is in trouble. This can happen through improper valuation or currency packing, chronic low growth, or inflation. Again, currency collapses are mainly caused by a lack of faith in the stability or usefulness of money, either as a way to store value or as a medium to exchange. Okay then, so let's talk about strengths of the US dollar. Ever since the Bretton Woods Agreement in 1944, other major governments and central banks have relied on the US dollar to back up the value of their own currency. Through its reserve currency status, the dollar receives extra legitimacy in the eyes of domestic users, currency traders, and participants in international transactions. The US dollar is not the only reserve currency in the world, though it is the most prevalent. As of October 2016, the International Monetary Fund (IMF) approved 4 other reserve currencies: the Euro, British Pound, Japanese Yen, and Chinese Yuan. It is important that the dollar has competitor as international reserve currency because it creates a theoretical alternative for the rest of the world in case American policymakers lead the dollar down a damaging path. Finally, the American economy is still the largest and the most important economy in the world. Even though growth has slowed significantly since 2001, the American economy still regularly outperforms its peers in Europe and Japan. The dollar is backed up by the productivity of American workers, or at least so long as American workers continue to use the dollar almost exclusively. And then, let's also look into weaknesses of the US dollar. The fundamental weakness of the US dollar is that it is only valuable through government fiat. This weakness is shared by every other major national currency in the world, and is perceived as normal in the modern age. However, as recently as the 1970s, it was considered somewhat radical. Without the discipline on the commodity-based currency standards such as gold, the worry is that government might print too much money for political purposes or to conduct wars. In fact, one reason the IMF was formed was to monitor the Federal Reserve and its commitment to Bretton Woods Agreement. Today, the IMF uses the other reserve as the discipline on Fed activity. If foreign governments or investors decide to switch away from the US dollar altogether, the flood of short position could significantly hurt anyone with assets dominated in dollars. If the Federal Reserve creates money and the US government issues debts faster than the US economy grows, the future value of the US dollar could fall in absolute terms. Fortunately, For the United States, virtually every alternative currency is backed by similar economic policy. Even if the dollar faltered in absolute terms, it may still be stronger globally due to its strengths relative to the alternative. After all, back to the question, will the US dollar collapse? There are some conceivable scenarios that might cause a sudden crisis for US dollar. The most realistic is the dual threat of rising inflation and national debts, a scenario in which rising customer prices force the Fed to sharply raise interest rates. If the US government struggled to afford its interest payments, foreign creditors could dump the dollar and trigger a collapse. If the US enters a steep recession or depression without dragging the rest of the world with it, people might also be dumping US dollar. Another option would involve some major powers such as China or Germany resume a commodity-based standard and monopolizing the reserve currency space. However, even in these scenarios, it is not clear that the dollar necessarily would collapse. The collapse of the dollar remains highly unlikely. Out of all the preconditions necessary to force a collapse, only rising inflation and national debt seems to be reasonable. Foreign exporters such as China and Japan do not want a dollar collapse as well, because the United States is too important as a customer. And even if the United States had to negotiate or default on some debt obligations, there is still little evidence that the world will let the dollar collapse and risk the possible contagion of ripple effects. However, what if dollar keep falling and losing the status? As a recent hot discussion, the Wall Street new bond king, billionaire bond investor Jeffrey Gundlach also expressed concerns that US dollar will decline as a consequence of current economic policies, resulting in the US losing its sole reserve currency status. The 61-year-old bond king highlighted that the United States status of the global reserve currency is in jeopardy. The US has enjoyed the status of sole reserve currency globally for decades, and it's an incredible benefit. It pointed that in the aftermath of the global coronavirus pandemic and lockdown, China's economy has been the strongest economy in the world by far. While the US GDP has bounced back by a lot of consumption, a lot of that consumption is going to China. That's one of the reasons why China has such a strong economy. So, what we're seeing in the United States is starting to fall behind in economic growth. That is not new things. That's been going on for a generation, the US falling behind. The investor also pointed out that estimates for when China's economy will be the largest keep getting pulled forward. Noting some economists' projections show China's economy will surpass the US by 2028. We have debt to GDP ratio that is fueling the majority of our so-called economic growth. So, is it really economic growth when you borrow money or print money, send checks to people who turn around and buy goods on Amazon? In addition to maybe paying down debt and speculating in stock market. And all these productions and goods actually come in from China. We are running our economy in a way that is almost like we're not interested in maintaining global reserve currency status or the largest military or so-called superiority or dominance. According to Gundlach, with the current economic policy in place,
and I feel that as long as we're on these policies, it's almost certain that that's going to happen. And because of that, the dollar should be going down.
We have been taking it for granted, I guess. We seem to take a lot of things for granted these days in the United States relative to how we thought about things in prior decades and generations. It's Gundlach's view that the US dollar has already peaked when the US dollar index hit 103. He believes the dollar will take out the lows of the past down cycle in coming years. He thinks that when we get to the next break to the lower level, the dollar will go past the most recent low of around 80 and even take out the record low of 70. So, he thinks there is easily 25% downside in the US dollar in coming years. All this will have to be another big issue and question to look into for all the US stock traders and investors in the future along the way. Please do let me know any of your thoughts and comments for further discussion. I'm so eager to have more sharing and discussion with you soon in the next one. Peace.